Welcome to AARP, Arizona Hispanic Connection. Educate. Celebrate. Connect. Arizona Hispanic Connection.
Good morning, everyone. Welcome to AARP, Arizona Hispanic Connection, for another very important subject. We have wonderful guests today with us. We will be addressing the subject, Uncle Sam. So this basically is taxes, and more taxes. Some people hate them. Others do too, to a lesser degree. I don't know if there's people who love them. We'll find out. We will be talking about from the different taxes that we pay, where do they go, how are they budgeted. We have people from the IRS, from the HR perspective, from the financial perspective, from the policy perspective. So this promises to be a very, very good show. I would like to now introduce our guest, and we have Steve Jennings. He happens to be my colleague. We've known now, 10 years, Steve?
That's close.
Yeah, and remember
That's right. That's close.
Yeah, and
David.
Steve Jennings is the Advocacy Director for AARP in Arizona. Welcome, Steve.
That's right. Thank you. Good to be here.
Thanks for joining us. And then we have Angel Seth. Do you go by your full name?
You know what? Sometimes if I want to be impressive, but no, typically.
All right. Angel Ayala from Elite Legacy Solutions. So you'll be bringing us some perspectives from the financial side, correct?
Absolutely.
Welcome.
Good morning.
Welcome.
Thank you.
Yeah. And then we have Susan Posada. Welcome, Susan. Now you have your own business. Let me see if I got it right. Susan Posada Agency?
Yes.
Wow, I remember. Welcome.
Thank you. Thank you for having me.
All right. And we also have Bill Brunson from the IRS. It was so hard to get you, Bill, but welcome.
David, thank you. And thanks for letting the Internal Revenue Service be on AARP, Arizona Hispanic Connection. It's always a pleasure to be here.
Thank you. All right. I believe this is a very important subject because taxes are a big part of our lives. And I would like to start the conversation by asking you to jump in as we move on. Hasn't taxes been with us from the very beginning? Wasn't taxes the very reason why eventually we became independent from Great Britain? The tax without, I don't want to pay taxes if I'm not represented, kind of thing, right, Bill?
David, my history classes are kind of rusty, but you're right. There was a rebellion in the colonies that caused the United States to be formed. There was the throwing of the tea in Boston Harbor and other items that caused that separation. And then even George Washington, during his presidency, put down what they called the Whiskey Rebellion in rural Pennsylvania, where farmers were not paying tax on the alcohol that they were producing. And that was a little bit of an issue, but he settled that. Probably Abraham Lincoln was the major player with the modern system of taxation because the Civil War was expensive, and he was involved with that. And so they had to raise money to fund the federal armies. And then in 1913, the Congress enacted the 16th Amendment, which then gave some authority to the IRS in its infancy to collect tax, to administer the tax laws. And things rolled along for a while. People were filing returns. Businesses were remitting taxes in a timely manner. And then when World War II took effect, then the withholding at source, the people that were hiring all these new employees were collecting tax for the federal government each pay period. And that's kind of where we are today, where if you do work for somebody, you file a W-4 and you tell them how much federal income tax to withhold. And then based on the amount of pay that you receive, there's going to be an assessment of Social Security taxes to be paid over to the federal government.
And we'll get to the nitty-gritty of the different taxes that we pay. Anything that you want to add to that, Steve? I mean, this is history. I mean, taxes have been part of this country's history, right?
Well, yeah, and you always hear we love to beat up on the system of taxation, and all walk around saying we're horribly overtaxed. We actually have one of the lowest tax rates among the industrialized nations, and it goes for a lot of really important things. I mean, the taxation is the way that we attempt to solve our common problems. That Bill mentioned, the Social Security withholding. Well, that's, the government is collecting money that's going to be paid back to you when you become disabled or if you retire. And it's kind of the foundation of our retirement that we then can invest other monies in a more risky means, like the stock market, and try and get ahead with them. But, that's one of the most popular things the government does is Social Security and Medicare.
And we'll get to the different taxes. Angel, anything that you want to add about taxes?
You know what? When I began in financial services, that was one of the things I quickly found out that a lot of people had the perception of one of the silent killers of taxes, right? But in reality, when it was introduced in the early 1900s, I think 1913, if I'm not mistaken, it was used and it was very low and it ran very efficient for a very long time. I think it wasn't up until the 50s or 60s, I want to say, World War I, II, right around that era, that's when it started increasing because it was so expensive and because it was so time consuming, right? Vietnam and all that kind of good jazz. But you know what? It's this country favors the business owner. So there's certain things that they don't teach us in school, right? That it can work out in your favor, and then we do need it. We need it for the roads, the firefighters, the government officials, all those to kind of keep it efficient to live the life that we become accustomed to here in the U.S.
Right. And Susan, you come from the HR perspective. How do you deal with taxes in your business?
I beg to differ a little bit with Angel in the sense that it favors the small business because every time I turn around, I'm paying more and more taxes for employees and estimated and my own personal taxes. The taxation is extremely high to the point that we have to make decisions on how much we pay an employee.
Right.
And
right.
in addition to that, we're being saddled with all kinds of regulations, not only from the employee perspective, but from healthcare reform and so many that are really taxing small businesses.
So you're a small business owner, could we say, and you feel the impact of taxes definitely on your business?
Tremendously.
Okay.
And with clients.
Got it.
My background is financial, and so I consult with my clients, and I do see a tremendous impact on the taxes and the decisions that they have to make every day. For instance, one of their second biggest expenses, other than payroll, is healthcare.
Right.
And so when we take a look at healthcare, which I specialize in, I think that becomes very, very difficult decision, and the deductibles and everything else are going up as a result of the taxation and everything else that they're being
Thank you
saddled
very
with.
much. And we'll come back to each one of you as we develop this subject. I did a little bit of homework, as I always do before the show. And so historically speaking, I'm just going to go through a list of the different taxes that we have. Obviously, we have the era of the colonial taxation that, Bill, you referenced. There's the Stamp Act tax. There is the Sugar Act of 1764, the Tea Act of 1773. Then you have the Boston Tea Party, which was an act of protest, actually, against taxation. And then came the capitation tax, which is a per-person tax, regardless of income. Then you have tariffs, and that is on trade, and that was to kind of protect the local industries. The South favored taxation, the North, this particular tariff, and the North opposed it. And then you have the sales tax on objects such as fuel, tires, tobacco, etc. Excise tax. But what you said, Bill, is that the Amendment number 16, or the 16th Amendment, is what kind of set a good foundation for taxation. And I would like to read it. It says, the Congress shall have power to lay and collect taxes on incomes from whatever source derived, without apportionment among the several states, and without regard to any census or enumerations. So that was the 16th Amendment, which basically, as I see it, it kind of settled the whole thing. There's a lot of protests against and then some were in favor of taxation. But this amendment kind of set the foundation for making it like, this is it. It's here to stay. Then there is also the estate and gift tax.
Correct.
This is the estate and gift tax, and obviously there's some there's an amount that you're allowed to give without being taxed. As you have up to $5 million plus that you can give in gifts lifetime without being
that's the estate
right.
tax credit.
And then in 1930, the Fica Tax was established. This Fica Tax is currently 6.2% for Social Security. In 1965, the Fica, or the Medicare tax, was added to this, which is 1.45%. And the Affordable Care Act added a little bit to that. We're not going to go into that detail, but it did add 0.9% to anybody making, I believe, $200,000 or more.
For upper income individuals.
That's correct. So the payroll tax, that's called payroll tax, FICA and Medicare. And then you have the capital gains tax, and then the corporate tax. So this is kind of a list of all the taxes that we pay. Some pay more than others, depending on your financial situation, etc. So we are ready for a break, and when we come back, we're going to address how is this money collected and where does it go. So stay with us. You're listening to AARP Arizona Hispanic Connection. We'll be right back.
Welcome to AARP Arizona Hispanic Connection. Educate. Celebrate. Connect. Arizona Hispanic Connection.
Thank you. Thank you for staying with us. This is AARP, Arizona Hispanic Connection. We are talking about taxes, and more taxes. The title of this program is Uncle Sam. We haven't explained where this concept of Uncle Sam comes, but anytime anyone wants to explain it, that's perfectly fine. So now, from HR perspective in the IRS, can we ask you to tell us how this money is collected? How are the taxes collected?
85% of all taxpayers have it collected at source through payroll. And then there's about 15% left, and they will pay, generally speaking, estimated tax payments. Most people pay their tax on a pay period basis based on their W-4 filings with their employer to have how much federal income tax withheld. And then there's, based on their amount of pay, then there's going to be Social Security taxes withheld as well. And then the employer takes that money and sends it to the federal government. It could be every pay period, but most often it is on a quarterly basis, just depends upon how big a payroll that they have, so that the tax is paid in a timely manner. So most people really don't see it. They see,
right,
say, their $500 a week that they're getting from working, but they've had federal income tax, Social Security tax, state tax. Maybe if they've got a pension fund, they've had that money deferred into that. Their life and health insurances, all that other is taken out. So what they get is their net amount.
Yeah. Would you add to that, because you come from the HR perspective, Susan? Do you have to do that? Are you like involved with the nitty-gritty of retaining those taxes and sending it to the federal government?
Not only do I have to send in the payroll taxes for the employee, but then I also have the matching portion, the employer match.
So you match the 6.2 for Social Security, the 1.45 for Medicare.
Yes, we do send in our taxes. In my case, I send them in through our payroll service that I utilize. The only reason I do that is because it makes my life a lot easier.
So that's not a government service, is it?
No, it's a paid service, so we have to pay. In my
so does
case,
the government have a system to collect for you to send the taxes to?
You as an individual employer have a choice. So you can become involved very significantly in the tax system, or you can hire out people to do various items for you in that regards, to prepare the tax, to remit the tax in a timely manner. And Susan was talking about going to a payroll professional, which is a very common item. But the cautionary there, I would say, folks, is to make sure that they're bonded so that you don't get set with not having the money paid in a timely manner and you're the responsible party. But that's going to affect very few individuals. But the Internal Revenue Service does have a direct pay system for employers to remit their taxes on this subject, on this area, in a timely manner. Zip, it's done.
That's very difficult to do without a payroll service, and the reason is because the tax tables change constantly, and we don't know exactly when they change.
Right.
So I utilize QuickBooks in my
briefly,
case.
again, from the HR perspective, what are the amounts of money that are deferred from taxes typically?
We have a couple of options, not too many. If you are able to participate, if your employer has a 401k, not every company does, especially small businesses.
Right.
They don't have the ability to be able to manage that kind of funding, along with healthcare reform, making sure that they have health insurance. That seems to be, the 401k seems to be the last part. But you have the flexible spending accounts, and I always encourage people to participate in those. Flexible spending account basically is an account set up with your employer that reduces your pay so that you pay less taxes on your payroll.
So basically it reduces the taxable amount, correct?
Yes.
The whole idea here is because gross and net are two different things. So all the deductions and what you defer,
correct,
all it does is brings down the taxable amount, and that's what we all want. We all want to bring the taxable amount to the lowest possible, because that's what's going to determine how much tax we're going to pay.
If you have children and you pay dependent care, that is the best way to reduce some of your.
And I assume that you especially
income.
when you counsel people, advise people, that's what you share with them about the different options.
Correct.
To defer taxes and bring the taxable amount down, right?
And then also make them aware of the tax credit versus a tax deduction.
Okay.
Right. So the credit being they get $1 per dollar. So if you have a tax credit of $1,000 for that year, you get $1,000 credit, opposed to a deduction would be a percentage. So that's what you're kind of talking about. So most people are aware of, right? So if you had a 15% bracket and you do some deductions, it drops you down if you eligible for whatever you did for that year, right? So just kind of making them aware of what the main goal is for that year, because it could change. For me, it changes every single year, right? For some of the small business owners I work with, because I cater to this small business community, it's going to dictate maybe they want to buy a house, maybe they want to refinance to get a larger business corporate or a building, right? So they got to know how much money you got coming in to know how much you can got money going out, right?
So we have talked about the history of taxation, the different taxes, how the money is retained and sent to the government. So, Steve, does this money go in general? Obviously, it goes to the federal government, especially federal taxes. And does it go to the Treasury, and then it gets disbursed? How is that? How does that work? And where does the government spends our money?
Well, the biggest, money that goes into the government you've been talking about, which are these Fica taxes, and they go to Social Security and Medicare, and they come back out in the payments to people. Really, the government is just handling those. The third largest expenditure the government makes right at this point is non-defense expenditures for the Medicaid system, which we call Access here in Arizona, and it's very essential system. About 1.9 million, about a third of Arizonans are on Medicaid.
So
which
Social
is
Security,
Access,
Medicare, Medicaid.
That's right.
Yeah.
And the government spends on federal and civilian and military retirement, veterans benefits, and the discretionary part of the budget, which is what's left over after you pay for those things.
And let me interject something, Steve, here. So I have a note here that says that there's mandatory spending.
That's right.
And then there's discretionary spending, and then interest on the federal debt. So this kind of like are the three areas or where the government spends our money.
That's
correct?
right. Yeah.
Can you continue to elaborate on the mandatory?
Well,
you talked the Social Security, the Medicare, Medicaid, defense,
the
veterans.
retirement for civilian and military, the veterans benefits, and then there's a number of other programs.
Right.
But the big three are Social Security, Medicare, and Medicaid. Those are mandatory. That's right.
And that's where the concern is, isn't there? That what we are spending, it keeps increasing. So there's always this worried about going bankrupt because of these expenses. Isn't
Well, the economy's growing so
Right.
that you can spend more. The government borrows money, families borrow money for mortgages or to put children through college, and those are good investments. They're investments in the future. Your children go to college; they should earn more money and get better paying jobs. And the government does the same things. We invest in education, we invest in infrastructure, roads, bridges, railroads, that sort of thing, and that helps the economy grow and pay more taxes. And
so
that's
as
how
the
it
economy
works.
grows, we pay more taxes and it compensates.
That's right.
Now, so by law, is Congress supposed to pass a budget every year?
Well, they, as a state legislature does, they do. And I think you're headed for this debt ceiling idea that you mentioned earlier. And the government is spending more than it takes in. It needs to sell bonds to finance the debt, and it needs approval from Congress to raise the amount of money it owes. That's the so-called debt ceiling.
So there must be like a law that says you cannot borrow more than this amount, and then they have to keep raising it as
Without
they need to.
congressional authorization. That's right.
So you have your budget, and then you realize I'm spending more than what I'm taking in, therefore I have a deficit. So now you have to get permission to borrow more
from
money.
the Congress to sell more bonds, and investors throughout the world love U.S. bonds. They're one of the safest places to put money. The government's never defaulted on its debt through world wars and economic recessions and incredible natural disasters like we've just seen in Houston and Puerto Rico. The government is good. It's one of the safest investments in the world, and that's where the Social Security funds are invested too. Those are special issue securities from Treasury. We're investing in ourselves with Social Security money. Everybody says, oh, there isn't money there in the system, but you don't take the Social Security money and put it in a basement and let it collect dust. You invest it, it earns more money just like private pension funds do, and that's how you can pay out more than you pay in. It earns interest over time.
As we come to the close of the second segment, could we point out 1, 2, 3 items where we feel that the money was not well spent? Wars use a lot of money. Am I correct? Wars, they use a lot of money. So there's always controversy about going to war.
Necessary wars
Right.
or unnecessary
Versus unnecessary wars.
I
Yeah.
mean, very few people will say World War II was unnecessary.
Right. So there's a lot of obviously sensitivity there, but nonetheless, there's still a lot of money being used to fund wars.
And I think, just with the federal government is around $4 trillion. And in there, of course, you're going to see some waste or some money that wasn't well spent. And I see Senator Flake kind of maintains a list of bogus things he thinks is bogus federal spending.
Right. I have a graphic here that says that the proposed budget for 2017 was $4.2 trillion. And the mandatory spending was 2.8. The discretionary was 1.15. So there is a deficit around $585 billion, and the debt is currently plus or minus $19-20 trillion. So that's kind of like where the government stands. We're going to have to go on our second break. We will continue to keep talking about incentives for saving in taxes. So stay with us. This is AARP Arizona Hispanic Connection. We'll be right back.
Welcome to AARP Arizona Hispanic Connection. Educate. Celebrate. Connect. Arizona Hispanic Connection.
Thank you. Thank you for staying with us. This is AARP, Arizona Hispanic Connection. We are addressing Uncle Sam. Nobody has explained where that term comes. Anybody?
Well, I'm going to take a shot at it, David. U.S., U, a period, S period, was a stamp that was put on a lot of different things at various times. But I believe Uncle Sam's been around since the Gilded Age in the 1880s, 1870s, caricature of the federal government in cartoons. But I believe that that's where it came from, maybe perhaps in the time of the Civil War, but U.S. For United States. And,
that's easy.
And Steve here is showing us a photo on his smartphone of the old poster where during World War I, where Uncle Sam's pointing out at you, I want you for the U.S. Army. Yeah.
Thank you.
But I think that's what it came from,
Yes,
the stamp.
thank you. All right, let's move on now to the incentives within the law, right? Because obviously some people want to pay less taxes no matter what, and regardless of how they want to do it. But there are some incentives that are very, very part of the tax laws. Could we address some of those? I know that we talked about the tax defer programs that we have, and savings and the health, and even plans for students. You know, like parents wants to open up a plan for students so that when they go to college, etc. Can we talk about that? Sure. Angel.
Absolutely. Well, let me just start off with I'm not a CPA or a tax advisor, but in my just under short of a decade of experience in financial services, I come across a lot of, doubts, fears, uncertainties when it comes to this particular time of year. With Uncle Sam saying, "Okay, you did great last year. Well, let's see how much let's see how well I did this year, right?" So, but some of the things we try to take advantage of. First of all, let me advise every single body listen to this on the social media, on the radio, is make sure to interview, to meet, to ask for referrals when it comes to a solid CPA or accountant is retirement plan contributions, right?
Okay.
At any level, whether your employer offers it or not. Everybody has the opportunity to open their own on their own, right? So if they don't have it through their employer, they can go out to, I won't list some of these major companies, but they're available out there. So
like a 401k?
Oh, well, for them will be
or
an
IRA.
Yeah, it'll be an IRA. They can open up an IRA. If they're self-employed, they can open up a SEP. There's about 15 different.
And are those also tax deferred,
Correct.
even if you don't do them through the employer?
Correct.
Perfect.
Absolutely.
Perfect.
So
now, obviously, what does tax defer mean?
meaning when you take $1 and you put it away and you haven't paid any taxes on it today, you put $1 away, it grows to $2. And when you pull those $2 out, that's when you pay taxes. Because most people, if you had a different investment, you would pay taxes once you took it out of your savings or checking account, which means you already paid income tax when it hits your bank account. Then you put that money away to grow to $2. Well, now instead of having $1, let's say you have 80 cents. 80 cents goes away and your 80 cents grow to $1.50. Right. So then that won't be tax deferred. So that's kind of what it is. You pay taxes later on, not today.
What I recommend is anyone who has the ability to contribute to 401k is first and foremost contribute to the maximum they can contribute. If they don't have that availability, is to make sure that they max out their IRA, because that's so critical.
Do we have the amounts, the max amounts for 401ks and for the IRAs?
I believe this year they raised it to $16,500 if you're under the age of 54, right? Or 50. And then if you're over, they get a catch-up contribution increased to 5, which is 22.5. I want to say 22.
5,000.
Oh, 5,000 more. Okay, so yeah, we are favored to put more money away because in essence they want to make sure we're able to take care of ourselves. Right, so that's why I say, hey, more money you put away, the more we'll give you of a deduction for that year.
Right.
If folks can remember the old Aesop fable, be like the ant, not the grasshopper. Save as you earn it and not friddle it away. And then when you become old, you're going to have some money to cover yourself.
Right.
There's one other instrument that you can utilize, and that's a health savings account. If you are healthy, sometimes if you're not, but in most cases, if you're healthy, you're able to contribute as much as you can up to the legal limit each year. And when you contribute, and if you don't utilize that money, it's like an IRA. Mm-hmm. And once you do not have a high deductible plan, you can roll that over into an IRA. So that's another element to be able to save funds.
The money that we paid for insurance through employer, that money this would be free.
It's a deduction.
A deduction, correct?
Potentially.
But yeah, in the business arena, we can deduct so much of it.
Okay.
And on the individual level, depending upon what it is that you're doing, it could be a deduction. Mm-hmm. So either you have an allowable expense, a deduction, or a credit for tax purposes. And sometimes an insurance item can be a deductible when you are claiming health expenses on, say, a itemization. Then health insurance costs can come into play.
Now, we did hear a few elections back that some people do not pay taxes. Is that true?
Sometimes people, through the law, which is something that people can change through grassroots efforts through Congress, but there are individuals out there that don't have to pay taxes in the sense that the law doesn't require it. And then there are other individuals who circumvent the law and don't pay taxes deliberately. Now, I'm not saying that there are some businessmen that don't deliberately try to circumvent the law either, but for most individuals and most businesses, people are honest and want to do the right thing. But there are circumstances where people don't pay tax.
Now, in that context that I'm referring to, they referring to the people with lower incomes.
There are levels that the IRS establishes each year that once you meet that threshold, then anything above that would be taxable. So a married couple filing jointly, approximately $20,000 would be a taxable threshold. So once you made more than $20,000, then any income above that would be subject to tax, because your personal exemptions and your standard deductions would zero out anything below that.
That's what triggers that they not paying taxes because of the deductions and exemptions and all that.
And then there are specialty items within the tax code that cause people not to pay tax, just depending upon the circumstances.
Right.
So now you can be an individual that's out there working, making a living, trying to do your best, and you don't quite qualify to file a return or pay tax or have taxes withheld. But you do qualify for the Earned Income Tax Credit. Mm-hmm. And that can put money in your pocket. You do need to file a return, and then Uncle Sam will issue you a check based on the amount of the Earned Income Tax Credit that you qualify for. So it would be an important item to check to see each year where you stand, whether or not you need to file or whether or not there's a credit available to you. And AARP provides free tax assistance within the community on an annual basis. And there's a similar sister program, VITA, Voluntary Individuals Tax Assistance, that's available for people to go to who are low to moderate income or elderly or disabled or English as a second language, where they can get free tax help in the community. They don't have to go to a paid professional. They're going to professional people that are trained and tested by the IRS, and they're going to look for benefits like the Earned Income Tax Credit to see if you qualify. And the nice thing about the Earned Income Tax Credit, folks, is it's a refundable credit, which means you can go back in time 3 years. So if you qualified it for this year, you may qualify it for earlier years. You need to check it out.
Right.
Steve? It's complicated. This is Steve from AARP, and that tax counseling Bill's mentioning is free. It's with volunteers that are trained by the IRS. They work out of libraries and other senior centers, other public spaces from January 15th to April 15th each year to assist people in filling out their taxes. But I wanted to mention just one thing. You know, if I buy a house, I can deduct the interest I pay on the mortgage and don't have to pay taxes on that. But a renter who pays rent every month can't deduct that. So there are things in the tax code that are slanted to advantage certain groups. Mm-hmm. My employer-sponsored health insurance is an exclusion from the income. It's income I actually get because I'm getting health insurance through my employer. The employer is paying for that, but it's excluded from taxable income, as are some pension contributions and earnings And interestingly, those are significant advantages people that have in companies, and 51% of those advantages, of the amount of those advantages, go to people that earn the 20% of the highest income. The 20% of the population making the most money takes advantage of 51% of that of the savings by having that excluded from their income. So the tax system is a funny and controversial thing. It was intended to be progressive in that people that are wealthier would pay higher rates than people that were poorer, and that seems the fairest to everyone. They've made the most money, but that's a political process, and it's manipulated over time.
Right.
Steve is hitting on a very important point, I think, folks, where the Internal Revenue Service administers the current tax laws, but the tax laws are subject to change by the Congress and by individuals getting out to vote and exercising their rights in that area. So currently there are very different things out there, but the item with the Internal Revenue Service is that we try to administer the tax code in a fair and equitable manner.
Thank you. And we need to go on our last break. You're listening to AARP Arizona Hispanic Connection. We'll come back to our last segment. Stay with us.
Welcome to AARP Arizona Hispanic Connection. Educate. Celebrate. Connect. Arizona Hispanic Connection.
Thank you for staying with us. This is AARP Arizona Hispanic Connection. Uncle Sam is our subject today. We've been having this conversation about the history of taxes. When did it start? What type of taxes we pay? How it is collected? How is it is budgeted? What happens when the government experiences deficits? What is the debt ceiling? And all that kind of good stuff. Then we move on to incentives to pay less taxes, to keep more of your money for your own, obviously, needs and expenses. I would like to bring another point in this last segment. And so it seems to me that the moment you move to a certain income bracket, the moment you start buying a home, it becomes critical to really do your filings of taxes in the right way, perhaps with a professional.
And that's correct. That's correct, David. It's never a bad item to go to seek out professional assistance in tax preparation. And the IRS has on its web page, irs.gov, information about how to choose a tax preparer, what to look for and what to watch out for. It also has information on individual preparers in the local area that you can find that do a specific type of taxes, because not everybody needs to seek out a tax attorney or a certified public accountant. Perhaps an enrolled agent or some other qualified tax person would meet your needs. So I would suggest going to irs.gov and seeing what we've got on our website in this area before making that decision, because choosing a tax preparer is kind of like choosing a dentist or a physician for your family. You want to choose wisely. A good one can help you. A bad one can hurt you.
Incentives. What are some of the breaks that businesses, depending on the size or whatever, have regarding tax?
Sure. So I'll talk a little bit about myself, because my industries may be different to some of the other individuals. Okay. But I know with me, if I lease my car for business expense, that can also be an option for done right through, as Bill mentioned earlier, my cell phone, my bill that we all live with our phones, right? That can also be a means.
Anything that you use for your business can be a deduction.
Correct. And then this is something that, there's classes available out there. This is not something I came up with. It's my own research, is asking questions like, hey, this is kind of what they mentioned with seeking the right counsel, is they give you that. I didn't know that I got into financial service. I had no idea what I can write off, what I cannot.
Now, from your perspective, Ms. Posada?
Well, Angel and I are in the same issue because we're in the service industry. So we do not have a lot of equipment to deduct. But in my case, because I do travel quite a bit, I did take advantage on a number of years of Section 179. And
Ooh,
Section
you know it by
179. Oh, yes, I do. In I believe it was 2010, in order to stimulate the economy, we were able to take 100% of the deduction, and I bought a car, and I took full deduction. I can't tell you how much it is, but it was a lot of money.
Good.
So I was able to save all of that in taxes. Now, since that time, it has been decreased. I believe now it's about 20% per year, I believe. But those companies that do have equipment or any form can actually use that as a tool to reduce their taxes.
Right.
What Susan's talking about, folks, is if you buy something that has a life to it, like say a refrigerator, or you re-roof your business or whatever, then you can depreciate that. You can take a small percentage each year on your income taxes, or you can expense it, which means you can write it off that year. And Code Section 179 allows an individual that would ordinarily have to depreciate the item to expense it in the year, and that gives that business more of a benefit in the area of less gross income. But the bottom line here is it's got to be an ordinary and necessary business expense. And even though that you, Susan, wrote this car off, I would be cautionary to the listeners where you have to have a percentage of business use that is associated with the cost.
Right.
So if it's 100% business use, then it's 100% write-off. But if you drive that car to the Safeway on the weekend and you take the kiddies to the soccer game, then that's not 100%. So you have to allocate that so that you do have only the business portion of the expense. That would be my cautionary to folks, to keep good records, good records.
In my case, it was a business car, and it was 100% business because I travel and my staff travels with me. So, and actually, I even use my own personal car.
And you keep a record of that.
Absolutely.
There you go.
Right.
Without question.
Angel?
And I think this circles back to certain demographics that gets favored in for. If you were an employee, that would not be an option, right? Just because you commute to work, that option's not available. So that's why I mentioned
tax law is kind of
tricky,
tricky, so
right? But even if you opened up let's say you did I don't know, ice cream stand or something like that, right? And you use that vehicle, that can be used for, opposed to just doing it on the. So it's just different. It just favors the right. It just favors certain demographic.
If a person were to go to irs.gov, and Angel hit right on a very good item where you've got certain expenses that are certain uses that are business and certain uses that are not. So if you go to irs.gov, there's a business section there, and we do speak specifically to the use of an automobile and what would be, say, from your driveway to the first job and from the last job site back to your driveway is not going to be a business expense. But if you go from job site to job site to job site, that would be. Now, there's also the individual that is the sole proprietor that has the business use of his home and leaves that driveway to go purchase something at the hardware store for his business, then that's a business use.
My brother is in that boat.
But you have to keep good records,
yes.
And your recordation can be as simple as a spiral notebook with a piece of paper and an odometer reading. So just write it down, and then when you go to your tax person, then you've got that recordation that they can use to determine how much tax you need to pay.
Yes. Steve, anything that you want to add?
I just wanted to say that there's recognition. If you watch what Congress is doing right now, one of their main pushes is to reduce the corporate income tax rate. But, interestingly, between 2015 and 2016, the corporations paid 13% less taxes to the federal government in 1 year, and the corporate tax rate is only 9.2%. of the total taxes that the government takes in. So you're going to see it go down further through action of the Congress, and of course that's to spur jobs, to get theoretically the corporations will hire more people. But it's typical that business complains about taxes, but on the other hand, prices go up to cover those costs. And that's how it works.
Can somebody address the tax brackets, the individual tax brackets?
They vary by marital status.
Okay.
So a single individual, say, would be having to pay tax at $10,000, where a married couple would be at $20,000. A head of household person, basically that's an individual who can claim a dependent, has a child under a particular age at home. They have a different tax bracket. I believe that they go from 15 to about 28%. No, excuse me, 39.6%.
15 to 39 on the individuals, depending on where they
0.6.
fall on the income.
Exactly, amount
Got
of
it.
taxable income.
There's a statistic. Most average Americans taking home 36 income, right? Gross
36,000?
36,000 a year, right? So with that numbers, and it's going to range whether they're married, not married kid. Roughly for the average American, it's going to put them at a 15%
Got it.
federal tax bracket, right? So if they're just reporting 36 that they made last year, they'll be into 15, but obviously it'll depend with a couple within 5,000-6,000.
So not
each.
everyone pays the same percentage.
And-
It all
and it-
depends on
right.
income and marital status, etc.
And it's done in increments too. So you have X amount paid at 15%, and then that amount that goes above that, you pay that at the 20%, and that. So you're not paying everything at 39.6% if you're making $1 million.
Susan, I know you want to add something before we're coming to a
No,
close.
actually, I wanted to kind of go back. We were talking about instruments or ways that we can save money. And I think it's really important to meet with your financial advisor.
Definitely.
And this concept doesn't necessarily it's not necessarily good for everybody. But one of the things that I have done is years ago, I was able to purchase a variable life insurance. And within that variable life, I do all of my investments. And if planned properly, that variable life will supplement my retirement income tax-free. But it has to be done correctly.
Okay, we're coming to a close. I just want to go around and your overall impression of government taxes, brief, in 1, 2, 3 words.
AARP supports appropriate taxation and efficient programs. We would also like to see the IRS be strong and enforce tax collections.
Well, I'll just wrap it up. Thank you for having us and from Elite Legacy Solutions. Thank you.
Yes. Any impressed taxes, mixed feelings, positive, negative?
No, I'm just very happy that I have a successful business, and
Great.
I'm happy to pay taxes. So the more money I make, the more taxes I have to pay, and
Perfect.
you kind of have to go with that.
Yes. Bill, last word.
Tax help. Go to irs.gov and get the answers you need.
I have more of a positive about taxes than a negative, honestly. And again, everyone has their own feelings and emotions and based on their own experience. But I'm happy. I think we had the conversation that I envisioned. So I want to thank each one of you. I hope the audience enjoy the program. You listen to AARP, Arizona Hispanic Connection. See you next time. Have a great day.
Arizona Hispanic Connection.